Hey everyone, it is Danielle Marie from the One Realty here in Austin, Texas, with your weekly Austin update. So today we're going to talk about what is happening in the world of real estate here in Austin from 16 January to 22 January. So if you're just tuning in, my name is Danielle Marie and Fountain, and I take a data-driven all-in-one approach to real estate. So I really like to get into the data to figure out what is happening, what is going on in the market in order to bring you the best numbers and have the analysis of what is happening in the future. So if you're just following me now, you're seeing this for the first time, feel free to give me a follow. Also share this out because it helps other people see it. But without further ado, and if you can hear me too, just leave me a comment. That way I know that you're out there, and if you have questions, you can stop and ask. But without further ado, we're going to get into this week's numbers. So first and foremost, it was a great week out here. Had 3 different clients go under contract, 2 buyers, 1 seller. I'm actually going to go out. I'm going out with 1 other buyer today, and hopefully I have another offer for a different buyer. So it is, I say, buyers are out there and back in the market, and they're back in the market even at interest rates above 7%. For one of my buyers, we had a inspection this morning, and I was talking to the inspection company, and they said out of nowhere, they had contracts flying through the door. So that is all going to come back to light here when we talk about this week's numbers from 15 to 22 January. So hold on tight because the market in Austin, Texas is heating up. So first and foremost, if you know me, you know that I like numbers, and we are going to dig into them today. So first and foremost, if we compare last week to this week, we saw 22 more listings hit the market at 1964. Now, what I will point out of this 22, and I'm putting the screen up here because an amazing viewer left me a comment and said, hey, I'd really like to see the numbers versus you just talking about the numbers. So I'm putting this up here so that you can kind of follow along, ask questions. This isn't my only chart that I'm showing. I'll show some more, but this is where we're at today. So 1964 is the number of active listings we have on the market as of yesterday. 22 increase from last week. But keep in mind, out of these houses, and this is where it goes back to, we'll talk about 217 were new this week. 43 of them, and this is where I always keep people in mind, is people go, oh my gosh, Austin's inventory is soaring. Like this past year, people, Austin's inventory is soaring. There's so much inventory. What people don't realize is that a lot of this inventory is aged inventory. It's inventory that was previously on the market. It never sold, and it's coming back. So this week, out of those 217 new homes, 43 of them had previously been on the market within the past 90 days and were back on the market. Last week, it was 49. So they start compounding on top of each other. So it's not necessarily new inventory, but it is inventory regardless. With that being said, our average price point, we went up to 1.16 million. So to give you an idea, last summer, we got all the way up to like a 1.13. It just depends on what properties hit the market. Right now, a lot of the luxury markets, luxury homes aren't necessarily on this open market. If you want to know about luxury homes, message me and we can talk about that separately. It's a whole different database that it's kind of not necessarily on the public market. With that being said, the median price point did not change. We stayed at $675 week over week. Now, this is where I go back. There's a couple leading indicators. So one, I've talked to my commercial friends, commercial office workspaces, their contracts increased in November and December. They had the busiest year, they said, out of the past couple of years. So I'm not surprised when I'm starting to see buyers come back. Days on market, our days on market have started to fall. So our average days on market, granted, it's 100 days is the average, so we're a little over 3 months. Our median is at 75, once again, 2.5 months. But what is important, not even is these numbers, it's this right here. We're seeing our week over week fall. So a couple of things. Number one, you have aged inventory is actually selling. Number two, you're also getting some newer listings that are kind of hitting the market. But what that means is that there is some sort of movement happening in the Austin real estate market. Next, you'll see houses with price reductions. So we now are at 49.8% of the active listings have price reductions. That's a lot. However, it's less than where we were in December. So we were closer to 57%. We've continued to fall. So that is a good sign for sellers. We're seeing price reductions go down. For buyers, that's something to keep in mind. We always talk about like, hey, when did that plateau hit? When did that base hit? When are we going up? And that's kind of some leading indicators right now that, hey, oops, I'm pulling this up on you guys, that something might be a brewing. So we're kind of seeing price reductions go down. You're going to see the new listings we talk about. Yes, there were 6 less of the older listings coming out. Average price point, very much in line with what's currently going on. Now, this is one of the big things I harp on or talking about pending. We can talk about active all we want. We can talk about sold all we want. But if we're talking about sold, things have already happened. We're late to the game. I want to get you ahead of the game. I want you to know what's happening while it's happening. And pending is a great way to do. So pending right here, we're seeing that we went up to 657. So that was an increase week over week of 47. So you can see it actually, there's more here, and you can see our 47 more than last week, and our week over week of acting is only 22 increase. So that's actually, we're going net to the pending, to eating away from those active listings. Our average price point also went up. So, and this is what it was listed at, not what it's sold at, but we're still going to keep that in mind. So we went to 821. Now, I fully expect the average price point is always going to probably be below this average up here, unless we get some really, really high-end multi-million-dollar houses that are going and the luxury goes faster than the lower. Not normally, does not normally happen. So we're probably going to always see this average price point and median price point a little bit lower, which you're seeing right now. You are seeing it etch up. That means that kind of buyers are starting to get out there a little bit more. I can tell you, I've got buyers, they were okay with a 7% interest rate. Some of them are putting down significantly more money than they normally would have, but that's what they're doing. We're not buying down rates permanently, anything like that. If you want to know about why you shouldn't buy down your rates, lenders are probably going to kill me, but we'll talk about the numbers behind buying down your rate and if it actually works in your favor. That's something we can do separately. With that being said, we're going to look at average days on market. So here you're going to see this popped up this week. So we're seeing our average days on market was 84 days. Our median was 66. Yes, it's higher than last week. However, what I will say with that is that's kind of a good thing, because that means we're eating away some older inventory. So that's why you're going to see this increase. So I'm not alarmed when I see the pending days on market go up, because all we're doing is we're eating away these pending days from these older houses up here. The other thing that you're going to see, and I talked about it right here, is homes with price reductions. So 19 more houses with price reductions went under contract. So we can see the number of houses with a price reduction, it still went down. So even though there was 19 of them had price reductions overall, we still dropped 1% to that 54.34, which we should expect that some of this right here, the number of listings pending with price reductions, it's probably going to be higher than the number of listings active with price reductions, because people are taking advantage of those sellers that need to sell. Also, once again, if you're just joining me, my name is Danielle Murray. I am the founder of the One Realty here in Austin, Texas. I take a data-driven, all-in-one approach to real estate out here. Feel free to follow me and share this out so that people can see it. Also, bookmark it. If you're really interested in numbers and you want to find, I don't show up a lot in your algorithm, that's okay. But if you bookmark me, you can come back and you can find next week's video. So with that being said, let's talk about the closed listings. So closed listings, they kind of look abysmal. We're at 416 week over week. We're down by 72. So that's a pretty big cascade off. However, even though we're down, and this is what I keep telling people, like, it's really interesting. Even though we're going down in the number of houses that are pending, the price point is going up. So you're going to see here, our price point went up by 16,000 for our average. Our median at 595 went up by 12,500. Days on market, the average, and this kind of goes back to, it's really that active. What is the active at, and how does it compare to the days on market for this sales? So we're seeing that the sales days on market's going up. That's people just taking advantage of those houses that have been sitting. Now, this is the point I really like to harp on. This is overall all single family homes in the city of Austin, Texas. Now, we work in Lakeway, we work in Bee Cave, we work in Round Rock, we look in Cedar Park, Pflugerville, all those different areas. But I like to give you Austin. And then if you want to talk about a separate area, shoot me a message and we can talk about that specific area and what is happening in that market. But here we're going to look at, yes, price went up. We're seeing days on market, what happened here on days on market. But this is the very interesting part. So the closed price to list price, so that is closed price to what it was currently listed at. We're going to look at the average and the median, and closed price to its original list price. We're going to look at that. When we start seeing these numbers in decrease, so we start seeing, like, instead of it being at 95 and we're seeing it drop to 94, which that means is the sellers are willing to give you more. The sellers are giving more, they're negotiating more. As we see it inch up closer to 100% or over 100% like it did during the pandemic, That means that we are inching towards more of a seller's market. It also means sellers are kind of tightening up their negotiation rooms. Or the other part is that you can have multiple buyers, and you can have multiple buyers hitting on property, which I have heard of multiple offers this past weekend. I'll probably have to do a post about that to find out how many houses showed up as multiple offers. I can tell you I have one client, we kind of waited a little bit. We reached out yesterday and the house they wanted went pending. And that was just them taking time, but we're going to learn from it and we'll go on to the next one. So with that being said, big numbers to take away is close price to list price. The median is houses are going for about 3%. You can see all the way to the 95, 3 to 4% under what it's currently listed at. And then from the original price, they're going, you see that 94, so that's like 6% under, and then 91.42. So you're looking at like 8.5. So anywhere from 6 to 8.5% is kind of where the sweet spot is. Now, I do expect this number right here to increase. Now, you can look at numbers and data all you want, and I can skew data. Not I can, because I don't like to do that, but you can skew data. I can show you just little glimpses, but I think you need to start looking at the bigger picture. So one of the things that I like to look at is we are going to actually look at what, let me show pending first, and then we'll go to monthly. So pending, so this is the number of pending listings. So I started to track this when interest rates start to fall back when we got to like 611. Before this week in September, we were doing like 123, 124 a week, which is just horrible. We were seeing that crash come in. And then all of a sudden the interest went down, rates went down to 6.1, and we saw this spike. And so you're seeing this spike right here of where all of a sudden buyers are buying and come back. You can see the height, the most that we had go under contract any one week was 12 to 18 November. So this is the week before kind of that Thanksgiving timeframe. That's actually expected. Every year we see a big jump that 1 week. And that's because, and then as we go into the holidays, it just goes down. Well, we almost hit that same number this past week. And if you've been watching Austin, it was freezing cold this weekend. Now, I know people up north, I used to live in Colorado. I've lived in Boston. I know what cold weather is, but people in Austin don't necessarily agree that that's the same sort of cold. So with that being said, if we look at where we were in Austin and we had that cold weather, we still got 166 single family homes, just the city of Austin, under contract this past week. Week over week, that's a 39% increase. 39% increase. And that was with a cold weekend where people weren't leaving their house. It was a holiday weekend. People were traveling. So that is a leading indicator. The market is starting to heat up. I talked to the inspector this morning, and they don't do just Austin houses. They say they're across the board. They're an amazing inspection company. But with that being said, they saw contracts, meaning requests for inspections, just going through the roof. So we may be having an earlier buying season than we normally do. Typically, we start seeing end of February, March pickup. But from what I'm hearing in agent forums, we're seeing buyers come back. Myself have had a few that have been waiting for a while, and all of a sudden they've gotten active. So that's just keeping that in mind. Now, going back to skewing the data, we are going to talk a little about we'll talk about December. I was going to do a whole different one about December. Yeah, you're tuning in today, so you're going to get it. You don't have to tune back in for the December one. But I'll talk about January, and we'll talk about December, and we will see what has happened. So before I do that, feel free to share this space, save it so that you can find it again. Also follow me. You can follow me on X at the_1_realty.com. Or just look up Danielle Fountain, the One Realty. I'm out there. If you can't find me, respond to this. But okay, with that being said, let's talk about the monthly. So I'm going to I've added a little bit more data to what I'm looking at. I think it's very important that we keep historical trends and historical numbers so that when people say the sky is falling, I can actually show you if it's falling or not. With that being said, in January so far, this is abysmal. We've only closed 247 houses. Not as scary though, because the last week of every month is when you see the big sales come out. It's all the new construction homes. It's people putting stuff at the end of the month to close. That's ask any title officer, loan officer. The last week is typically the busiest. So if we compare it to where we were in 24, and that's 24 is right here, is at 488. Right now we're shy by about 201, so 44. We're under by over 45%. If we look at our historical average in January is 610. We are down almost 60%. Do I see these numbers popping off entirely? No. That goes back to, that is why I also track this. So when I'm tracking my weekly and I'm tracking like what our pending is right here, that kind of gives me an idea of what I can see coming out this month. So I would not be surprised if in December we end up in like the mid 400s for our sales. So I mean, I do think we'll break 400 based on everything I'm seeing. I think we might get very close to where we were in January of 24. But what is the big thing? So this is the, hey, if you're listening to this, this is why I like shop on the rooftops. We see the market and we see stuff happening is look at our average sales price for this year. We're at 785 and 569. If we compare that to 24, we were at 720 and 556. We are beating our average and our median. So it's not just our average, we are beating our median as well. We're beating our average sales price by 9%, our median by 2.3%. All the while, our days on market, our average was actually very similar to last year right now. So even though we seem to have a slow season this year, all of a sudden our average is close to it. The other thing that we're going to see is our close price to list price. If we look at original and the median, we're over here close price to original list price. We're closing at like 2% higher than last year. So last year we were closing at like 92% of the original list price. This year we're closing at 94% of the original list price, and we are just starting to get in. So this is a great news as far as like price points and seeing stuff move. People always say, well, okay, it's newer homes that are selling and different things like that. Well, what I can tell you is from boots on the ground and what I'm seeing is I'm seeing houses that are in need of major renovation. Those are starting to move. And the houses that are selling, because we haven't had professional flippers and renovation companies the past year because interest rates have been too high for them. They weren't going to get the return on the investment. A lot of these houses are selling, and they're selling in their as is phase in Austin. So we're seeing the average price go up. In both of those, even though our number of sales are going down or haven't been that strong in this past time, we're seeing it back at price. If we look at December, so if we want to compare December of 24 to December of 23 or 24 to 23, I'm just going to point this real quick up here at the top. So you can see in December, you're going to see that we ended up selling 78 more homes than last year. That's a big deal. However, our historical average, we were still down by over 26%. Our historical average was 887. So you can see our sales were down. We beat last year, so that's a good sign. We went into 25 with December of 24 beating it out. That's a great thing. But our prices, look at this. Our price year over year for Austin, we went up 10.86% on single family homes. Guys, that's crazy. 10.86% year over year for that. Now, granted, that's not keeping where we were in November. I'm not comparing those. I'm just saying the fact that it's continued to move, because if you watch, real estate is seasonal, and you'll probably always hit your highest price for your homes in about June, July is like the highest price your house is worth. And then we typically go down. It typically goes down in the fall. So if I was to compare these numbers right now and I was to compare it to July, more than likely it's going to have gone down, but year over year we increase. So that's kind of a good thing. And we're seeing that kind of stabilize. You're also seeing that we even went up, and at the same time, our days on market were higher than last year. And we still went up, not only with price, but also what our closed price out. So we closed at 94% of original list price last year in 23. So like a year and a month ago, it was at 93%. So with that being said, there is a lot of activity. This got me very excited. My clients going under contract. I've already had 2 closings this year. It is getting exciting in the city of Austin. I have a couple sellers that we've been watching the market, and because there's not inventory on the market right now, and we're talking about, hey, there's aged inventory coming up, maybe you might be waiting. Maybe strategically you might say, hey, I'm going to wait until end of April, May, when there's the most buyers to put out there. There is, but right now what's also shining through is that there isn't as many houses, and you're seeing those, hey, the real listing houses are coming up. So you can sometimes stand out when there's not competition. So something to think about. You have to really talk about like specifically where your house is, and we move on from there. But with that, if you're just joining me, I'm about to close this out, but you can rewatch it. My name is Danielle Marie. I'm from the One Realty here in Austin, Texas. Woo! I take a data-driven, all-in-one approach to real estate. Big takeaway this week is we saw a 39% increase week over week in the number of pendings. We're seeing that across the board. We're also seeing the closed sales for prices inching up, even though our number of sales aren't. I think that we're going to be in a big surprise in February. I think February is going to be very nice. Numbers that are going to come out and surprise everyone. Other thing is, people say, oh, interest rates it's going to doom and gloom, we're going to fall. But what I'm seeing right now is people are tired of waiting. They've been waiting for 2.5 years and people are now buying. So with that, I hope you have a wonderful day. I'm about to go see some houses in Dripping Springs. Have a great day.